Hey there, welcome to the Budget Money Grow podcast. I am your host, Christina, and today I wanted to talk about the subject of cryptocurrency and why I like it, but also why I don't love cryptocurrency. Okay, so cryptocurrency in the blockchain space is a relatively new phenomenon in the financial sector. When I got involved in it a few years ago, I was really feeling like I was late to the game because it had been around since 2009. At least that was the inception of Bitcoin coming to the public knowledge was around 2009. So I was like, I'm late to the game, and I was really anxious to get going. So I was just feeling like, I got to learn so much. I got to catch up on this. But I was anxious. And so I would say, if you're not in it yet, but you're thinking about, just don't be anxious, right? But as I have been in the blockchain and crypto space, learning and experimenting in some ways, I've realized that I wasn't late at all, that this is still technically like an early adopter space. There's a lot of people that aren't in crypto at all. Okay. And so I like cryptocurrency. I really, really do. To me, when I compare crypto to like stocks, bonds, insurance, ETFs, different more traditional, I should say, financial products, what I will say about crypto and blockchain is that it is more accessible to the average person. If you really wanted to get in on the cryptoverse right now, you could download an app today and get started. As a matter of fact, you probably already have an app on your phone that will let you do just that, right? Purchase some Bitcoin. And really, that was one of the guiding premises of Bitcoins, that it was a peer-to-peer currency. You didn't need a middleman, right, to engage with it. So many of the barriers in traditional finance are not actually present with crypto. This has been my personal experience. Because my career was in the traditional banking and mortgage lending systems, more traditional financial systems, I could totally understand like why there was so much hype and so much excitement around the digital asset space. Because in the traditional financial systems, access to the systems or access to the knowledge of the systems is usually one of the biggest hindrances or roadblocks for the average person to have actual success. And that's something that an advocate for is like the average person getting that access and understanding how things work, right? Because when you understand how they work, you can, use it to your advantage. Now, also, what I like about crypto, I like how Robert Kiyosaki refers to Bitcoin as the people's money, right? And it's because crypto is that peer-to-peer. You don't need a middleman. I can get someone's wallet address, right? They could be halfway around the world, and I can send them some cryptocurrency, and within minutes they can have the payment, right? And that's amazing. And it doesn't have to be Bitcoin. There's thousands of cryptocurrencies. So they move, and some of them move a lot faster than Bitcoin as far as the speed of the transaction. So if you've ever had to go and deal with the international payment, trying to get it somewhere, you know that this is why crypto has really changed the game, because they help institute a way to send like instant payments, right? And that's, again, something I really like, the speed of the transactions, that, again, the no middleman aspect. I think it's amazing when it comes to crypto and the blockchain. Now, another thing that I really, really like about crypto and blockchain is the whole idea of the DeFi movement, which stands for decentralized finance or independence from the central banks. The DeFi movement is really the biggest reason there's so much excitement for crypto, which leads to how I first got into crypto. When I first paid attention to crypto, I was still in banking. This was in 2017. And if you didn't know, in 2017, there was an epic run-up of cryptocurrencies. And I remember a lot of customers were coming in to send wire transfers to these various crypto projects. And, I having conversations, and they were excited. And me not really being really fully aware of crypto, just kind of hearing about it in passing, but not really diving into it, those conversations gave me a little bit of insight. So, of course, that year, the cryptos went on an epic run. A lot of millionaires were made, and people were jumping in on fear of missing out, FOMO, you know. Now, I wasn't one of those people. I didn't try to jump in. I was just kind of observing what I was seeing. But not long after the meteoric rise, the crypto market crashed, right? And so a lot of people were just jaded. They were like, oh, this is a scam, you know, whatever. And they got out of it. I'm sure a lot of them now are looking back those years ago and saying, well, if I would have maybe, you know, kept my assets, some of my assets in there, they would probably be sitting on a pretty penny right now. But the way that I actually came into the crypto space, though, besides that initial awareness moment being when I was in banking, was when I started to really educate myself on the banking system, our financial system. Like, there was a lot of things that I was not aware of. And so once I got educated on the banking system and what it was designed to do, I could understand and appreciate what crypto was attempting to do, right? So again, Bitcoin came on the scene at 2009, and that was right during the Great Recession of 2008, right around that time. So people were looking for other solutions, you know, they were looking for solutions outside the banking system. So once I was educated, I jumped in head first, and I lost some money, and then I gained a lot of knowledge in the process, right? So I would say crypto, what a lot of people, I think, how they make the mistake is they get in on these FOMO trains, and it's like, oh, I don't want to miss it. I don't want to miss it. And they don't really understand what they're getting into. They don't have a strategy for the long term of how they're going to handle or manage any digital assets they get. And so I'm pretty sure there's more crypto millionaires that could be made, but you're more than likely going to have to be very strategic, because you may see huge gains, but if you don't know how to manage it or don't have a strategy, you could see those gains quickly disappear, right? And so, yeah, so you don't want to do that. So, you know, there's a lot of great things about cryptocurrency, right? One of the things that I learned right away is that getting into cryptocurrency does require like a mindset shift, because in traditional finance, we've typically been taught how to be dependent on certain systems to access our monies, our funds. That's kind of how we're programmed and trained. You know, we put our money in the bank. We don't even understand what the bank is doing with our money. What if there's safeguards? We don't understand even the laws, right? Most people don't even realize that when you put your money in the bank, you go from legal owner to beneficial owner. And what that really means is, if the bank is a legal owner, because they have the possession, and we know possession is 9/10 of the law. So that's significant. A lot of people don't understand that about the banking system. I would say that you have to have a mindset change with crypto, because when you start dealing with wallets, there's keys to the wallet. You have to make sure you maintain your access to your keys, because you can lose those keys, right? And suddenly you don't have access to whatever funds or whatever currencies were on that wallet. So crypto, like I said, it's a mindset shift when you get into it. And that takes me to Bitcoin and why Bitcoin is going on these runs and these higher highs in the price. There's a component of scarcity with Bitcoin. And with that scarcity, means there's only so many coins to go around, right? So I don't know if maybe you've never heard this, so just explain this real quick. There's only a certain amount of supply of Bitcoin, and there's only so many to go around. And so there's also some of the lost coins that are just out there that, you know, can't be touched because people lost access to their keys. So there's Bitcoin that's just sitting in wallets that can't be accessed. Like I said, unless they come up with some sort of technology to get those lost Bitcoin out of those wallets. I don't know. Um, but there's a lot of, dormant Bitcoin that can't be circulated. And that's, again, what helps bring the scarcity factor of Bitcoin to the forefront. But there's so many things to like about cryptocurrency. Of course, there's money to be made in cryptocurrency, right? And so a lot of people are running into this space. I've been in this space long enough to where I've seen people previously say it was a scam and then turn around and say, oh no, I'm getting into Bitcoin, or I'm getting into Ethereum, or I'm getting... So it's been amazing to see the 180 turn of a lot of prominent individuals who at one point, just a couple years ago, were saying that crypto was a scam and leave it alone. And now they've done a whole 180 and they're like, oh yeah, we're going all in. We're doing this, we're doing that. You're seeing the partnerships with different banks, with crypto platforms. PayPal did one as well. It's definitely entering the more mass adoption phase. So I would say from when I got started to now, it's way easier to get involved with crypto. I just think that some people are hesitant because it's still kind of a mystery of what do you do and the technology aspect of it. But it's way easier now. Definitely more options to get on board with it than when I first started. And here's the other thing when it comes to crypto, why I think a lot of people are jumping in and why I like it. There are a lot of ways you can make money with crypto, right? And you can simply stake coins, right? Staking is like the crypto version of savings, except when you stake and you stake on certain platforms, you can earn higher yields, or you can earn greater rewards for staking your coins, right? So a lot of people are realizing, like, leaving your money in the bank, you're not getting any return on that. So they're moving their funds into crypto because that's where the better rates are, right? You can put your money in a stable coin on some of these platforms and earn 8 or 9% on whatever you're staking. So again, and that's just simply putting your coins somewhere and letting them sit and earn dividends. So that's why I say it's the crypto version of saving. So there's so many ways that you can make money with crypto. It's really, really awesome. Now, with all that said, like I said, I like the peer-to-peer. I like the low barrier to entry. I like the technology, how it's changing the game, how fast, you can get transactions to someone. I like the different ways you can make money with crypto. Like I said, I've been dabbling in and learning. And so I see the promise. I see the benefit of all of this. But here's what I also know. And that's why I'm thankful for the way that I came into cryptocurrency. I'm glad that I didn't come in on how can I say this? I'm glad that I didn't get caught up in the crypto part first. I'm glad I got caught up in the education part first, because, crypto is great, but I have questions. And this is why I say I don't love it. I have questions, and I'm a thinker, right? I am a thinker. I have questions. So some of the questions that I have around cryptocurrency, and Bitcoin, let's start with Bitcoin, right? Bitcoin was a faceless cryptocurrency, meaning there was no individual person that stands behind Bitcoin. And that's cool, right? It goes with the whole decentralized peer-to-peer technology and currency. So it goes with all of that. But I don't believe that there's anything random that happens. And I did a podcast episode where it was expressing that sentiment that nothing is random, right? Nothing is random. One of my financial mentors states that our financial system died during the Great Recession of 2008. And I was a realtor during that time. I was like boots on the ground. I saw the immediate and devastating impact of that recession. it was life-changing for me being a realtor during that time and watching people's lives literally be turned upside down. And I don't know, and even though I know we're in this era of pandemic, panorama, whatever we want to call it, 2008 was a really scary time because I remember how fast banks were closing, financial systems were shutting down, lenders were closing their doors. They were open one day, the next day they were closed. I saw that firsthand in 2008. So I remember again the devastating impact, how the real estate market crashed. People lost equity overnight. They suddenly went from having equity to being upside down in their homes. I saw all of that firsthand. And so when I look at what's happening right now in our financial system, I can believe that our system has been on life support. And I believe that when you start looking at the developments of a metaverse and all of these things that comes with the metaverse, right? You can see that this was a progression, right? That it wasn't accidental that crypto or digital currencies came along, because we're on a progression. We're shifting. That's what this whole great reset talk is about. It's a complete shifting in our financial system, in our societal structure. It's a total shift that we're going through right now. And so this is why I say I have questions, right? And when I see people saying, give up long-standing assets, sell your long-standing proven assets for a digital asset, I'm scratching my head. Because although there appears to be some regulation coming for crypto, and I can see, again, I've been around it long enough where I can see different changes that are being made. I can honestly say from my personal experience, I've seen more pushback or more resistance to people having actual tangible assets than I've seen them holding digital. I hope that what I said makes sense, but I've seen more resistance or attempt to stop individuals from holding tangible assets more than I've seen them resisting or pushing back on individuals holding digital assets, right? So again, this is why I don't love crypto. I still live in a physical, tangible world. I'm not personally ready to be Ready Player One. I get the whole metaverse, virtual reality, right? I get all of that, but I'm not with that part of it, right? I can understand ways to make money from it. I get all of that. But me being in a virtual reality is not something that appeals to me. So I can understand the use case, and because I've been using digital assets, I can understand using digital assets and having digital assets. But to say that I won't hold any physical, tangible assets. And here's the thing. I'm the type of person that I don't just listen to what people say. I do my own study. I do my own research. And I look at what the power structure is actually doing. So there may be a narrative being pushed forth to the average everyday person. But when you look at what moves they're making, they're doing something opposite of that. So if they're not giving up their tangible assets, and as a matter of fact, they're accumulating more of the tangible, why would I fully go in on digital? That's just my thinking on this, and this is why I don't love crypto. I like it. I think it can be a value for you in your portfolio if you're willing to do the work, right? And you're willing to get a plan in place, right? And you're not trying to do a get rich quick, because if you're trying to get rich quick, you're going to lose your money quick as well. So if you have a plan and you want to get involved in the digital asset space, it's a great time to do it. And it can absolutely have a place in your portfolio if you're building up an investment portfolio, but you should not negate physical assets, right? You still live in a physical realm, physical world. So yeah, I think that physical, tangible assets should be a part of the game plan. And so that's really my take. I like crypto. I like the technology. I'm a techie. Getting into crypto kind of awakened me to things that I had forgotten. I forgot that I had coded a website, quite so many years ago. I forgot about that. Like, I was like, yeah, I did do that. And I kind of just did it on the fly. I just got a book and read and went and did that. And so I like the technological aspect of this space and the amazing things that it's able to do. But again, I think that when it comes to financial portfolios, you should diversify. And when you look at even our central bank, our Federal Reserve pushing, and this not just here in the US, but in other countries, they're pushing towards digital currencies, right? So we're basically being told that, hey, we're going to push the dollar into a digital dollar. So it's not going to be too much different than being in the blockchain space, right? That a lot of people are currently involved in, except it's going to be under the control of the Federal Reserve, the central banks. That's going to be the difference with the CBDC, central bank digital currency. They're going to control that. They're going to issue that. Whereas now you're able to freely trade and profit from cryptocurrency and hold cryptocurrency. But, it's not to say it's not going to change, because again, this is a new space. A lot of regulation has not actually come down on this space at this point. Eventually, if you look at history, eventually that's what happens. More regulation comes. And again, I look at all angles, right? At the end of the day, it's computer money, it's digits, and it's great. It's exciting. There's a lot of promise, but I think that it's important to diversify. And when I hear sentiments that people should give up their physical for digital, again, because I read and I study, and this is why I say nothing is random, because when you actually read what, let's say, the World Economic Forum has to say, the head of the World Economic Forum, what he has to say about what the regular folks are going to be doing, when you look at what the International Monetary Fund, when you just read what their plans are, then you understand how this is all working together, right? Or how it can all work together. Let me say it like that. But you can see it as a roadmap. And again, we live in a real world. I don't necessarily want to escape to a virtual real world. I want to stay in my physical world. And so because of that, I still want physical assets. And again, that's why I don't love crypto. So I hope I was able to shed a little bit of insight. Definitely check out budgetmoneygrow.com for additional resources in regards to managing your money, finance, and even investing. All right, so that's it for this episode, and I will see you next time.
Thank you for listening to the Budget Money Grow podcast with Christina. Please check us out at budgetmoneygrow.com for exclusive content.